Wait till Alrighty. Welcome, everybody. We are so excited and sad that this is the last of the four financial literacy workshops. And so, again, big shout out to SFU Merge for hosting this. Jacob and I, we wish we had something like this, and it's an honor for us to be able to give back to the community and hopefully bring value to all of you in the world of finance. And so, let's get on with the last of the four workshops here. So, we're bringing back the memes, we're bringing back our conversation, and really the first half of our conversation here today is really looking at what have we talked about in the last 3 weeks and what are some action steps for you to take, right? And then we're going to go off and top that off with really where do we fit in as advisors and what does that value look like? Then we'll just open it up for the other half of just an open floor discussion and have a Q&A. And we'll actually have the opportunity to introduce our incredible mentors, and you guys have the opportunity today to just ask questions directly to them. And so just a quick poll before we do get started, let me launch this, but we're curious to know which workshop did you like the most, right? And so we purposely didn't give the option of none of them because we're very sensitive, so please be nice and just pick one of the options. Maybe it's even today's workshop, and who knows, but let's launch that poll here. Is it launched?
Yep, you're good.
Yes,
There we go. Oh, that's not it.
Oh, that's a different one. Yeah.
Let's see.
Some people are voting anyway. Thanks, guys. Good audience participation.
Thanks for the participation.
Oh, oops, that was my bad. But I love how the first person just clicked memes right away. Okay, hold on. I'm gonna see.
All right, we'll give it a second.
This is a fake poll anyway. It's from week 1. I need to see if I can launch this week's poll.
I think we might have to end this one first.
Yeah. Okay, let me go to this week's.
I think I got it.
Is it?
I got it. Boom.
Okay.
Which workshop was your favorite? 1, 2, or 3?
Wait, can you say the topics of the workshops? Like what 1, 2, and 3?
Oh yes, definitely. So workshop 1 was the first half of the wealth building process. Number 2 was the second half of the wealth building process, and number 3 was the investments one. And so when we look at that, which one was your favorite? I believe number 1 was very meme heavy. Number 2 was more interactive.
As soon as you said meme heavy, all the votes were number 1.
Yeah, everyone, those who weren't even there, they just went, "Oh, must have been this one." And then
wow, that's crazy. Actually, it's quite balanced. That's amazing.
It is, yeah. Third one was more technical. It looks like a lot of people enjoyed it. Alrighty.
They like the third one. They like this one.
Yeah. But it looks like the first one was the most popular one. It must have been the memes.
You share?
I don't know, actually. I don't know. Maybe you guys can put in the chat box why that was. We're curious to know. But let's end the poll here and just move on.
Yeah.
Awesome. So it looks like the first one won by a little bit, and we're going to move on here. So action items. So you completed our workshops. Congrats. We also saw a lot of the consistent names and faces, which is really, really encouraging to see. But let's have a quick summary of what we have talked about and what can we do with this with each step. So number 1 has to do with insurance planning. And so what's an action item that we can take? Really, at the end of the day, you are best in a position just to sit down with a licensed professional. Right? You can do it on your own, but it costs you nothing to work with a professional. So why not? Number 2, saving that first $1,000. The best way to do this, an action item that you can take starting today, creating your budget, tracking every single dollar, giving it a roll, and living within your means. And here's the rollback. I mean, some of you probably weren't even born when this was a thing. Jeez. Number 3, student loans. Thank you, Jacob, for laughing. Do you have a plan to pay off your debt? Right? We will do this for free to figure out what is your debt repayment schedule. And with that being said, do you have student loans? Let's launch that second poll. We're curious to know how many of you have student loans. So I'm going to launch that second one. I think I got it under control here. Boom. Thank you. No, yes. How many of you are paying for school as you go, borrowing for school? Maybe your parents help supplement your education. Majority are actually saying no. That's actually surprising to me. I thought there'd be more yeses.
We do have like some non-SFU people as well. So.
That's true. We do have people from all over the world. Cool. Okay, we'll give it just one more second and we're closing it. And
Justin Trudeau Fund.
alrighty. So majority of you have said no, and I'm going to close this. That's just interesting for us to see. So thank you. Step 4, to recap, is an emergency fund, right? What is that magic number where if you look at your bank account, you feel safe if something were to happen to you? And then step 5, investing. Everyone's favorite topic, but there's a lot to consider. And so if you guys remember from our last conversation, there is a lot to consider. So let's take a look at the recap for that. First off, which account should I use to hold my investments? Do you know the difference between the TFSA and RSP? Let's start with the basics. Do you know the different tax advantages of using a non-registered account? Do you know when you should be using a TFSA versus RSP? And of course, there's a number of other registered accounts, such as the RESP, RDSP, and so on. Then you need to make into consideration what types of investments should you be holding as well. Do you know what your actual risk tolerance is? Do you know what breakdown of equities versus fixed incomes you should be having? And maybe you want to hedge your portfolio with other forms of investments as well, such as real estate, gold, and so on as well. Do you know how to navigate this? Then the next thing you want to consider are which investments you should actually be buying. Geographical location, considering the number of holdings, turnover, fees, environmental, social governance issues. Have you thought about this? Did you know that your investments can actually have an impact towards these three different areas? Tax implications and factor exposure. You may have not even heard of some of these words before. Have you considered these things when investing? The next thing we do want to consider again is then where should you buy them? Mutual fund dealers, self-directed, robo-advisors, online brokers. And as Jacob mentioned last time, theory is never the same as reality. Can you put these theories into practice consistently? Can you focus on the long term, contribute consistently, remain invested, avoid FOMO? My friends are making so much money, man, I gotta get it. Can you avoid that, right? How do you maintain your portfolio? Then all these other things as well. Maybe you've never even heard of these things as well. Small cap value, index investing versus growth. Which one is best for me? Alternative investments such as equity and fixed income, other than equity and fixed income. Advanced strategies such as Norbert's Gambit. Is this something that's applicable for your situation right now? Could this save you a ton of money? And aligning your portfolio to your financial goals. Now, this is so important because why are we actually investing in the first place? Why are we looking to grow our money? If we don't have a clear vision of where we're trying to go, then the steps we take today are not very clear then, because where is it that we're trying to go? So understanding where you're trying to go will help you create the actual steps you need to take today, which is why ultimately aligning your portfolio to your goals is the approach that you need to be taking. Then we want to take a look into things like tax planning. Do you know how CPP-OAS works? Spousal RSPs, more confusing terms. Matching grants, what are all these things? Tax shelters and so on, retirement planning, insurance planning, estate planning, and there's even more, everything else. And so this was a very popular slide from last time. So I'm going to give it just a second for everyone to digest everything that's going on here. But the main point is this here, right? You need to do this when considering your investments, and you can do it on your own, or you can do it with an advisor. So I'm super excited to be able to let Jacob take it away from this next part. Jacob has some incredible, relatable screenshots of his own clients and friends actually asking him a lot of the things that relate to these different topics. And so I'm going to let Jacob take it away, and I will stop sharing my screen just for a second.
Super, man. That's perfect. So I'm going to pop in and share my screen now. Hopefully you guys can see this. So what we're going to do now is show you guys like what it's kind of like to be an advisor, and just a perspective from our point of view. And so when we look at investing, right, we usually focus on this section the most, right? And the question that we get about these two sections the most is this, right? This is a bit dense, so just look at this one part here that says, this January 17th, one of my friends says, hey, Jacob, Happy New Year. Bit of a random question, but I have some money in my TFSA that I want to invest, and I can only buy/hold ETFs and literally have zero idea what to put in it. Do you have any recommendations, right? So as you can see, this question is all the same question, and we probably get this one every week, right? So in the topic of investing, right, there are literally endless questions that are related and center around this big question, right? So let's take a look at some of the real life questions that I get and some follow-up questions around, what should you hold in your portfolio, right? So here's a client who says, is it worth buying a stock that is performing poorly but has a high dividend return, right? And very similarly, what do you think of dividend aristocrats? So dividend aristocrats is an index of high dividend paying stocks, right? This client says, seems like they have a track record of beating the S&P. And if you kept reinvesting the dividends, couldn't you have a huge growth with low volatility? I'm curious to as what the downsides are, right? Very smart question. And this person obviously knows what they're talking about. I'll go on here. Hi, Jacob. Hope you've been well since our last group call. I was wondering, have you looked into Chinese ETFs at all? I'm considering investing in them because I think the Chinese economy is going to continue to increase over the next 10 years. That's a great question. Here's another one. I want to chat with you about some ETFs, specifically Canadian ETFs versus American ETFs. Which is more worth it, considering that there's tax implications, right? And then a question here on robo-advisory. This one's a really complex one. I'm just going to stick to, this is a statement that I had to provide. So this client says, I'm just going to stick to Canadian ETFs. I think there's enough for me. And then they said, I'm going to track this index here called the Russell 2000, and that's small cap ETFs, right? And so I say at the bottom here in red, actually, whatever ETF that they just mentioned is only a small cap ETF, not a small cap value ETF. And there's a massive difference between the two. So that conversation saved this person definitely a couple $1,000s. And so last one here, this kind of summarizes the complexity that we're just talking about. So here's an individual who says, hey, if you're buying US ETFs, do you buy with Canadian dollars or US dollars? Or do you buy the Canadian version of the US ETF? And if you buy the Canadian version, do you buy currency hedged or no? And this kind of summarizes everything that we just talked about, but lol, there are so many options, right? So the key takeaway from this is, right, is that there are endless investing options, right? It's kind of like peeling an onion. Like every time you peel a layer of an onion, it just gets more and more, you guys realize it's more and more complex and there's more and more questions that need to be answered. And so in the previous class, we mentioned that all investing topics are discussed at a PhD level, right? So hopefully you guys see that now. And so you can Google each question if you decide to build your own portfolio, right? But usually this is too much work for most people. And you have to be really careful about what you learn from online, because there's a lot of people who have a lot of different opinions, right? And not all of them are exactly know what they're talking about, right? And so what we want to focus on is, what does an advisor actually do with an individual? So an advisor will get to know you and they'll get to know you and they'll build a portfolio given your unique situation and your values. So this is what an advisor will do with you typically. So typically an advisor, they'll ask you 14 questions, and this is to assess your risk tolerance and your personal situation, right? Number two, something they'll usually do is ask about your investing ethics. So they'll usually ask, are there any companies that you would not invest in as a matter of principle or moral reasons, right? For example, a lot of people don't want to invest in companies that destroy the environment. The last one here is, they'll just basically answer all these technical questions that you guys saw in all these screenshots, right? And so this is just a tiny sample, and that was just fun selection, right? This is just, these screenshots are all about fun selection, but every single other topic under investing can get pretty long, as you guys can see. Let's talk about accountability, just this one section, okay? So here's a client, says a whole bunch of stuff, and at the bottom, she asks, the market is really down now. What do you think I should do at this point? Gradually investing or hold off and see how the virus affects the market? Okay? Another person here says, I went on Wealthsimple and I went through their user interface. According to my Wealthsimple, my contribution room is this. Would you agree with that, right? So this individual, right, can do the math, but he realized that the stakes and the penalties are so high that they wanted me to double check their work. Right? Last person here says, so basically the market is down, right? It is down, but it doesn't matter, right? I said, no, not at all. We can chat more about this if you'd like. The same process as always, and you guys have seen this before, right? Contribute consistently and never sell. And she just says, okay, I just needed some validation, right? And so there's really one key learning point about this slide, and that's this. Even if you logically know what to do, right? Many people like to have someone who they can A, keep them accountable, and B, double check their work, right? So for example, like if you had a 1% error on a $100,000 portfolio, that's $1,000, right? And most people will make multiple 1% errors. I'll say that again, because these people who are sending these messages definitely understood this. They knew that a 1% error on a $1,000 portfolio is, on a $100,000 portfolio is $1,000, right? And most people will make multiple 1% errors. So that was just investing, and G will quickly summarize here.
Yeah, absolutely. Thanks, Jacob. So with regards to step 5, there's a lot to consider. That's the main takeaway. When building your portfolio, you have to consider asset location, asset allocation. Are those two not the same words? They look the same. Psychology and accountability, and so on, right? Do you know how all these things work? Or do you know when you need to know how these things work? And so next slide, please, Jacob. There's a lot going on, and you need to figure out what's relevant for you, right? You can either do this by sitting down with an advisor, that word, or you can do it on your own. And so there's no right or wrong answer here, you guys, but from our point of view, from the things that we've seen, from the people we've helped, to us, it just makes sense to work with an advisor, essentially. Go ahead, Jacob.
So hopefully you guys saw a little glimpse of what it's like to work with an advisor through investing, but really as an advisor, we get questions about everything, right? And so we get some great stories too. So I just want to leave this screenshot in because it's one of my favorites. But I digress, there are some other things that are more important. So here's a story from a client, right? He says, yo, story time. So lately I met this girl on Hinge. And if you guys don't know what Hinge is, it's basically a better version of Tinder. And he continues, and she is so straight and to the point. Like on date 1, she was discussing financial literacy with me. And I'm just thinking, good thing Jacob taught me the basics. So that was one of the highlights of my career, definitely. Here's another one, a little more serious. So serious, naive question, is it taboo to talk to multiple realtors simultaneously, right? And so this individual is buying a house for the first time and has many questions about different things, right? So most people buy a house once or twice, but as advisors like G and I, we buy houses with people every day, right? So just this week, I had 2 clients that purchased houses, right? So you do it once or twice, and we do it every day. And so many people want that support from an advisor because A, they know it's a big decision, like usually a couple $100,000 decision or a couple $1 million decision, right? Or B, it's their first time. They know that a 1% error can really add up. Right? Second one here, a client asks, after our meeting with your mentor, would you be able to talk with me for like 10-ish minutes? I want to get your opinion on what I should do in terms of family conflict, right? And so family conflict, my mentor says this all the time, family conflict is a problem that money can't solve, right? But it can be solved ahead of time if you anticipate it. So money and people's lives are so deeply intertwined, right? This is something that we see all the time. This one here, I get this question every week. Hey, Jacob, what does this mean? So in this case, it was a question about Questrade, right? But this is something that we just get all the time. What does this mean? And finally, a great question here. Hey, Jacob, just curious, do you charge interest when lending money to a friend, right? As I mentioned this before, I think in a previous class, but basically the Bible actually has 2,000 verses on managing wealth, 2,000 verses on managing money. And it's worked for 2,000 years, and I'm pretty sure it's going to keep working, right? So Christian or non-Christian, they can appreciate a proven process for making important decisions. Right? And is there one more here? Yeah, there's, okay. So here's a summary of just a slide, right? So an advisor will A, hold your hand through big decisions, right? So you buy a house once, we buy houses with people every day. You retire once, we retire people every day. You get married once, we help married couples every day. Number 2, an advisor will give you an experienced second opinion about anything in life, right? Because we see so deeply into people's lives, we probably have seen something similar to it before, right? And the third thing is a little bit cheeky, but an advisor will help you impress your next Tinder date. So moving on here. Let's talk about insurance planning for just a second. So the thing about insurance planning is when we review someone's situation, like on a professional level, when we work with someone, these are the documents that we want to take a look at. So as you can see, there's quite a bit going on here, but I highlighted just the insurance documents, right? So here's some clients that I work with at CIBC, EY, and these other places. And you'll notice, right, that CIBC, for example, these guys have a 140-page document, right? And so what happens is if you go through these group documents in real life, it will take you forever, right? And so this is just their insurance. So the key point here is, insurance is complex. It actually is a 1,000-page book on it. Both G and I have both read it. And so like you could do it yourself, but it's so much work. I couldn't imagine who would think that it's going to be worth their time. Here's some more stuff on insurance. So a client asks, I'm still looking at insurance. Very few actually post their rates online. And I give a few comments, and then they ask, do you recommend a certain carrier? Okay, so in Canada, there are 150 health and life carriers, right? So if you want to do your research and get to know the strengths and weaknesses of every single one, be my guest, right? But for most people, it's definitely not worth it. And so this next story, right? I hope you guys take really careful attention. And I had to ask this person if I could share this story because it's a really personal story. And so I'm really excited to share it with you guys today. But yeah, it's a little bit sensitive. So this client asks, I mentioned this briefly the last time we talked. Life insurance is honestly the thing that gives me the most stress to think about. This lady, 100%, took advantage of my mom when I was in first year, and I was skeptical, but I didn't know enough to stop it. And honestly, I've regretted it so much ever since. So basically, what happened to this girl was her family, her mom specifically, bought life insurance for their family, and she's really regretting that decision. So continuing here, to the point where I think to just cope with it, I just refuse to think about it, which I know is not the financially wise decision, but man, Jacob, I don't get angry that often, and I get so angry every time I think about this. So yeah, I know it was a bad decision in the past and bad not to do anything about it until now, but the second best time to plant a tree is now, right? And moving over here, and it's absolutely ridiculous that we pay so much for a policy that's probably really bad. Can I book you to discuss? How does that work? Either way, this is a sunk cost fallacy where I think we've paid like $15,000 over the last 7 years, and there are 13 payments left. I really don't trust anyone else on this stuff besides you. So I'm just gonna let that sink in for a second. So $15,000 a year is like buying a car every single year for like 20 years. Okay, like this is a very big decision. So there's one key point that I want you guys to take away, and that's this, right? When you go somewhere that you don't understand and the stakes are very high, most people want to be with someone that they can trust. I'll repeat that again. When you go somewhere that you don't understand and the stakes are very high, most people want to be with someone that they can trust. If you guys remember the Whistler analogy that I gave last time, when you're driving to Whistler for the first time, like a foreign land that you've never been before, you don't know anything about, right? And the stakes are high, right? It's really nice to have somebody who can guide you along the way. And so how do you avoid this, right? The easiest way is to look for somebody with the heart of the teacher, right? Otherwise, something like this will happen to you. Okay. That was insurance. And there's so much stuff going on here. I think you guys are getting the point. Like there's so much other stuff going around. Sorry, that's happening besides investing, right? So here's a question here from a client who says, I need your contract reading skills, please. Basically, they had just bought, I think, a house it was, and they wanted me to double check the documents. And skipping down, I said, I'll email them and check costs for you. So they wanted a referral. They wanted to be introduced to somebody like, I think it was a notary for this guy, right? And so one of the cool things about working with advisors is that you have access to the network, right? So moving on here, this client asks, X bank keeps asking me if I want a pre-approved line of credit with a 4.8% interest rate, right? And so here's a very simple question on debt management. Here's another one. Do you recommend life insurance even though I don't have any liabilities? Great question. And I think last question here is, hey, Jacob, quick question about blank. This is a specific stock or ETF, actually. Quick question about a specific ETF. I was able to buy it on Questrade without doing any currency conversion stuff. Is that right? Right. And so this is a question on currency conversion. Last one here. Can I please book an hour with you? I'd like to review the draft of my will and power of attorney. At the bottom there it says, just to go through the will with a second pair of eyes and to discuss power of attorney. I think my original power of attorney is not optimal. And so if anyone doesn't know what a power of attorney is, it's basically if something happens to you and you're out of the country or you're ill and you're unable to make financial decisions, right? You can assign somebody to make financial decisions on your behalf, right? So it's a very important document, and this person just wanted a second set of eyes to review that document, right? Let's keep on going here. And so matching and grants. So I talked on this last time, and it's going a little bit long, so I'll just skip through this quickly. So a client sent me this screenshot, right? And followed up with this. Hey, bud, do you know anything about this? Do you know anything about this pension thing, right? So we talked for 5 minutes and saved this client about a couple $1,000. Right? Here's another pension question. So I was guiding them through it and they just didn't understand it. So here in the red box, they said, sorry, can we get on this call? There's a bunch of terms that I'm unsure about, right? So we talked for about 15, 20 minutes and once again, saved them a couple $1,000. Here's the last one that I talked about a little bit last time. They basically say, I was thinking about the CESG grant. They were thinking about another grant that they had access to. I better apply for the BCTESG. Essentially, it's $1,200 from the government. And so for this individual, they have 2 kids, right? And the BCTSG grant is $1,200 per kid. So a 5-minute conversation saved them like $2,400, right? So that's the power of working with an advisor. We know about some opportunities that you guys may or may not know about. Yeah, actually, go ahead, Kree.
Yeah, no, thanks, Jacob. And so when it comes to group benefits, and what we mean by that is once you do start working, and for those of you maybe you already are working, the benefits that your employer gives, your boss gives, do you know what the benefits you have are? Do you know about the benefits that you're entitled to, even through SFU, right? Very often you're going to see dental, drug prescription, vision, acupuncture, physio, massage, sometimes even free shoes, and very often therapy. X amount of hours will actually be covered. And sometimes your employer will actually add to your pension plan as well. Go ahead, Jacob.
Okay. Cool. So yeah, maybe I'll just wrap it up with the last two slides. So down the road questions. So a lot of the questions that we get sometimes is, down the road, what is it like to manage money at a higher level? Or what is it like beyond the 9 steps, right? And so here's the first question. So out of curiosity, some of your $10 million plus clients who can easily take care of their own needs for a long time, do they still get insurance, right? Because some people are thinking down the road, like some people, especially in Vancouver, Toronto, they're going to inherit money. They're like, what's it like to manage that money? And what do I need to be prepared for? Okay. But the question is, sometimes I wonder what life is like when you're that rich. Like, what kind of stresses do you have? You're not worried about losing your job, for example. I think we mentioned this last time in the first webinar, how some of the wealthiest people are actually the most stressed and depressed people, right? So there's some very different problems, very big problems that come along with that. And you guys can actually mitigate a lot of them by watching the first 2 classes that we just talked about. Here's another question. Basically, this client was shocked that I knew somebody who retired at 29, right? And she was like, "How do I possibly do that?" And I was like, I'm excited to show you what's possible, right? So just stretching someone's mind a little bit, because once someone's mind is stretched, right, it can never return to those original dimensions. And last question here, do you happen to have any online resources about tax rates for companies? When you said that businesses get taxed at 11% if you play it correctly, it blew my mind, right? And this guy, he's paying about 40% in tax every single year now. He's got a pretty high tax rate, right? And so our summary is this, right? For down the road questions, we want to show you guys what is possible down the road, right? That's what it's like to work with an advisor. So here's a summary. I know that was a whole lot of information. I feel like we always are giving you guys a bit of a fire hose, but here's a summary of everything that we just talked about, okay? So first, an advisor will hold your hand through the big decisions through life and answer your technical and what if questions, right? So insurance, estate planning, investing, buying a house, these are really big decisions, and there are literally endless questions that are followed up with every single topic, right? And so the summary is, you retire once, we retire people every day, and a lot of people want that support. Okay? Number 2 is an advisor will double check your work. So both the math and the documents for purchasing a home, building a portfolio, reviewing your estate planning, etc. Right? And the reason is because 1% error on a $100,000 decision is $1,000, and most people will make multiple 1% errors, right? And usually, many of these decisions, especially when you're purchasing a house, those kind of things, that's like $1 million or multi-million-dollar decision, right? And 1% error becomes pretty hefty at that point. And tax, that's probably the biggest one. 3, show you guys what's possible down the road. We just talked about that, right? How you can retire early, how you can save huge amounts on taxes, and how you could live in the next 20, 30, 40 years. 4th, they'll connect you with professionals, right? So for G and I, we have our networks, right? And we will connect people with notaries, lawyers, realtors, accountants, tax professionals, and for us specifically, our mentors as well. As you guys are going to meet one of them today, which is cool. And lastly, you guys get a trustworthy and experienced second opinion about anything in life, right? So the nature of this profession is that it allows us to go deep into many people's lives, right? So an advisor can help you, or they can help you, or they can connect you with someone who can help you to navigate a crisis or opportunity that you've never seen before, right? And so in summary, we know about opportunities and pitfalls that most people don't even know about. I'd like to close quickly with just this comment from one of my clients that I got like literally, I think, earlier this week. And they said, "I'm so glad that I have you in my corner. I spent my whole life focused on learning about computers and martial arts, so I'm pretty clueless about money." Okay? And later down here, another client was closing a deal, and I asked, "So you gave them the money already?" And they said, "No, I wanted time to talk to you first, and I made it clear to X agent that I value your advice of all." Right? So you can see that the value of advice here, right, for these people has been very, very valuable. So close out here. G, go ahead.
Absolutely. So yeah, again, that was a ton of information, but when it comes to summarizing value of advice, these are 2 very important things that we want you to understand. So PWL Capital, along with Vanguard and Morningstar, who have similar findings, they find that advisors actually add as much as 3.22% to investor returns, right? And that's interesting. That's even after fees. And also the second point here, investors with advisors accumulate about 4 times more assets than those without advisors after 15 years, even after fees. And so when it comes to fees, you guys, remember this. They're only an issue in the absence of value. And the next slide is going to just be a complete list of other stats and things to know about the value of advice. We're not going to go through them, but we just wanted to have it up here if you guys want to take a quick look. Let's move on here.
And we'll, we just forgot to put the citations on here. So under the show notes, we'll put it there afterwards.
Yes. Perfect. Alrighty. So the first half is completed. And so what we have for you guys prepared actually is a survey. And so we'd love to get your feedback on not just the first 3, but even just the last little bit here that we had prepared in the 4th workshop. And so we're going to be dropping the survey link in the chat box below. And if you guys actually do fill out the survey, it takes just about a minute or 2 to complete. You'll be entered into a raffle where you can actually win a gift card. So please take some time and we'd love to get your feedback. Let me find see if I can find that link. Jacob, do you have that link on hand?
I do. I think it's this one, right?
Boom. There you go. So if you guys open that up, just take the next minute or 2, and we'd appreciate it if you guys give us some feedback here.
Do you want to, do you have a guitar guy? That's kind of random. This guitar or something?
Sure, I can do that.
Cool. That'd be some nice.
Sure, I can do that. We usually do that for other workshops. So
yeah, that's I'm so used to it.
Ready. Welcome everybody. Oh, I just hit my guitar.
Oh, my man. I know it's valuable. So
Put that out. This is my child. Alrighty. Does anybody have any requests?
The Rick Roll song.
What was that?
The Rick Roll song.
No. All right, let's just address this quick question here.
great, man. Thanks.
Yeah. So certificate offered to a few handful of people who, and so everyone can opt in to do this, but there's a small assignment that we'll be assigning. And so if you want to have the certificate, then you'll have to complete the assignment. More details will come following this workshop. So if you're interested in doing this assignment and receiving the certificate, then feel free to just tick that yes button and then we'll reach out to you. All right. We'll just give it maybe 1 more minute. If everyone is done, can you just say yes? And then once a good number of yeses do pile up, we'll move on here.
Or maybe like just say no if you're not done.
So it looks like a lot of people are finished, so maybe we'll wrap it up there.
Yeah, they're probably, if there's anybody who's straggling, you guys can mention.
All righty. Okay, yeah, okay, we're good. We get the point.
Cool, thanks guys.
And
Yeah,
yes,
Michaela.
this is recorded. Yes. All righty. Okay.
There's no timer for 10 minutes. You're good.
Okay, sounds good.
So yeah, just continue sharing my screen here, man. Unless you want to go from here. Yep. All right, sweet. So, okay, so what we're gonna do is really quickly. Actually, can you take over?
Oh, sure. Yeah, I'd love to. So, you know, Jacob and I, we're in this position not for a reason. It's because of the tremendous support and the mentorship that we've had. And I cannot say the most. I'm even at a loss of words just to introduce them. I cannot say good enough things about these 2 individuals. They're both just tremendous and super wise. And so it's really an honor for us to have an opportunity to have them join us here today. I'd like to introduce Ivan and Enoch. Yeah, they're going to take away most of the Q&A here for us. And so this is your opportunity, guys. Seriously, if you have questions, then please ask us now. This is your opportunity to ask someone who's been in the industry for 16 years and has a million different designations and specialties under his name. So I'll let them kind of take it away from here. But let's see some of the questions that you guys might be having.
Yeah, so right before they come on here, Ivan, you can take off you can unblock your camera, those kind of things. But quickly, we'll just answer some questions from last time. And so we can get into them a little bit deeper, but we'll just cover them at a high level. So one of the questions was, what are your opinions on stocks that give dividends? Getting money back periodically seems more appealing than just getting my money back 40 years from now. If my understanding of stocks if my understanding of stocks that give dividends is right. So yes, your understanding is technically correct. So what happens is a stock will sometimes issue a dividend, which is a cash distribution to its shareholders, right? And so just really quickly, just give you a high level idea of what's happening here. So two of the big pros is that in Canada, you have a very favorable tax implication, which basically means that your income from Canadian stocks, dividends specifically, are taxed favorably, right? And the second thing is that, which is more important, is that when some people hold dividend stocks, it allows them to hold longer. And because the most important thing is that a person doesn't sell, right? So for some people, it just gives them that peace of mind and allows them to hold it for a long time. So those are the two big pros, right? The cons is that there's some foreign withholding tax implications. That's a pretty complex topic, so I won't go too deep into them. But secondly, the more important one is, a big con is statistically, dividend stocks have lower expected returns than if you did it another way, which is the traditional portfolio. And that is statistically what has happened in the past, right? And so that's, once again, a really complex topic. But this gentleman named Ben Felix, and I think if you just go on YouTube and look right and type down like Ben Felix dividends, you'll pretty much find that video on YouTube pretty easily. Just look into that more. And Ben Felix is like, he's very well respected in the industry. Next question here is, can you briefly explain how advisor invoices their services, right? So there's different parts to wealth management, as you guys noticed. So for investments, typically an advisor will charge 1 to 3% of the portfolio size, right? So if you have a $100,000 portfolio and a 1% fee, that's going to be $1,000, right? And some clients, portfolio managers also do commission, or they do a hybrid of commission and fees. And percentage of those assets under management, right? Percentage of the portfolio size. So that's the way investments are usually done. For insurance, it's always done on commission, but there's a very few companies that actually do it on a fee-based. But pretty much every single company in Canada will do it on a commission base. For tax, estate, and financial planning, so this is like a consulting basis, right? Usually that'll be like $100 to $500 per hour, right? And then sometimes for a financial plan, and also, wait, this number can get way higher than $100 to $500 per hour, right? And then for a financial plan, right, usually varies. It's usually like $2,500 for most families, right? I just want to mention something about tax. So tax is one of those things that you can talk to a professional for like $500, and they could save you like $5,000 in tax, right? So it's one of the most, I guess, most commonly used consulting-based advisors. So hopefully that makes sense. If you have any more questions on that, definitely let me know. And really quickly, we'll tackle these ones. So we got this last time. What's the simple main reason for why mutual funds are still so popular, right? The biggest reason is because you get an advisor to hold your hand, right? You get a percentage of money, a percentage that you pay every single year, right? That percentage is allocated towards to your advisor for doing those things like rebalancing your portfolio and all those things that G mentioned earlier in that really long graph with all the different parts, right? The second reason is because they're still really popular because mutual funds have worked in the past, right? They actually do successfully build wealth, right? Not as much statistically as index investing, but as you guys have seen, right? Return rate doesn't matter as much as most people think. And so as you saw today, holistic financial planning is really what's important. And we can see that statistically in the math also. And the last thing is indexes are not really marketed in Canada. In the US, it's a little bit of a different story. I'm getting some questions in the chat, G. I can't see it though. Is there anything important?
We'll address it. I will jump in super quick. Actually, if you can go to the last slide.
Yeah, definitely.
For Jacob and I, actually, when it comes to this question on advisors invoicing their services, we do want to point out this. We both don't charge an hourly rate, especially when it comes to helping younger people. The reason we do this is because, quick story is I had a 54-year-old refer to me, and she sat down with me and she said, "Oh, I'm so excited to sit down with you. me. And I was like, oh, great. I'm happy to help. And she said, you know, I love the name of your firm. And I thought, oh, that's really interesting. What do you love about it? And she said, Freedom 55. That means I can retire at age 55, right? And I said, that's exactly what it means, actually. So great. Like, you want to retire next year? Give me your pension statements, your TFSA, RSP, all your assets, and let's see what you're at today. And she goes, what does all that mean? I'm like, oh, my bad. No worries. How much money do you have saved? And she goes, oh, money? No, I didn't save anything yet. That's why I'm talking to you, right? And so I thought she was joking, and so I kind of paused, but she wasn't joking. And so I thought, oh no, she really needs my help, right? And so there was no way for me to make $1 million come out of nowhere, but that woman that day, she needed my help. However, like, my goal is to help people before they need my help, right? And so in order for me to help people before they go through those headaches, it doesn't make sense for me to charge $2,500 for a financial plan, which is why we don't charge, or at least I personally don't charge an hourly rate. And I'm still very passionate about helping younger people. So I did want to mention that. So when it comes to younger people, at least personally, I don't charge an hourly rate. Yeah. Anyways, sorry, carry on.
Yeah, it's a really good point. That's why G and I are not huge fans of the hourly rate, especially for young people who just are curious. Like, we both think that personal finance should be something that is taught in high school, right? I don't want money to be a barrier for a lot of young people. Yeah, good point, G. Next question here. We'll just quickly do these three before we get these other ones. But given the complexity of everything, do you think that formal education is necessary, or do you think you can get to know everything by practice / mentoring / courses? And I'm really curious to see if Ivan and Enoch want to jump in here, but it's a very strongly, and this is a very much an opinion question, right? But I'll just say this, right? If you start a business, right, it's nice to have an accounting background, right? It's nice to have that formal education. It doesn't hurt, right? And so is it necessary? Not necessarily, but it really helps a lot, that formal education, definitely. The last two things here are, why is fiduciary duty standard not mandatory in Canada for financial advisors? So fiduciary duty simply means that you have to look out, there's kind of like a legislation or a law or a rule that you have to always be doing something in the best interest of your client, right? Which simply makes sense. Like, that's what advisors should be doing, but it doesn't exist in Canada, right? And so it's a very good question. And so basically, like, the long story short is that Canada doesn't see this as an issue, and it's been like that for so long, and it's hard for them to change, right? So because of those two things, it's been there for so long, Canada doesn't think it's an issue, even though the statistics are glaringly possibly contradict that statement, right? They haven't decided to change, right? In the US, they do have fiduciary duty, but you can either be a fiduciary or not, which is kind of not great either, right? And last one here is, what is the best trading platform for beginners? And this is a very personal situation based. That's a good question. Yeah, can take that offline if anyone still has questions on that. Great. So maybe we'll open it up to Ivan Enoch to jump in with some stuff. Let's see.
Alrighty. Ivan, are you able to see the chat?
Yeah, I can see it.
Awesome. Okay, so welcome to Ivan, and I'll let him start tackling some of these questions off one at a time. I'm not sure if Enoch's in the call right now, but
Yeah,
he's
Enoch's
here.
here.
I'm here. Oh, hello. He still has his Christmas tree up. That's awesome.
Christmas is a lifestyle.
Stop judging him, you guys. He's also very sensitive.
You're just jealous, Jonathan. You don't have a Christmas tree in your
I
background.
have a tree. I have a
It's
tree in my
fine.
background. I have a fake tree.
Yeah, you have a fake picture tree. He has a real Christmas tree, so it's fine, buddy. Okay, let's start looking at some of these questions here. Or if you guys have any additional questions, you guys can just unmute yourself and ask. We'll be more than happy to answer some of the questions, whether it's investment related or not, or what it means to actually work with an advisor, or what we actually do. Jacob did explain a big part of it, but it's these questions that he answers are very random, and not a lot of people ask those type of questions to him. So I'm pretty surprised to look at those chats and what you're actually dealing with, Jake. So, okay, so it says, since we are at all-time high, is there there's a global pandemic. The global economy is pretty messed up. There's a huge stock tech crypto bubble. Is it recommended to prepare being shorting the market? If you don't even know what shorting the market means, don't do it, because you're going to lose a lot of money if you don't understand what it is, right? A lot of it, I would recommend, there's some really good YouTube videos out there that can actually explain it in more detail of what shorting is or playing with options, right? It is involving leverage, and it does commit you to an X amount of actions that you have to take. So I don't even, for myself, I don't even short the market or anything like that, because to me it's too risky and I'd rather not do stuff like that. If I know that I'm going to invest for the longer period of time, my philosophy is essentially I worked hard for my money, so I don't want to lose it just as quick, right? I rather protect my capital. And my question I usually ask myself is, how do I minimize the risk and lose as little money, but still be able to profit? If I can't answer that question properly, or I don't even take an action towards it, right? Risk reward is good when you're young, but at the same time, you guys work hard for your money. You don't actually want to lose your money. So what Jacob and Jonathan has been teaching you about dollar cost averaging it out throughout, if the market is low, you buy more, right? If the market is high, you buy less, and it will average it out over the time. So let's keep the short tradings and stuff like that to a minimum, unless you guys take very good courses and understand how derivative I can't even say it because I don't like it and options work. Avoid it like a plague, please. We just want to protect your income and your money, not make you lose it, right? Enoch, do you have anything to add to that?
So I
I think
have
you
a
pretty
quick
much said.
sorry.
Oh,
I have
sorry.
a quick
Sorry.
question. So I'll let you speak first.
No, it's okay. I was gonna echo Ivan's points, but I'm curious to hear what you have to say.
Yeah, Michaela, go ahead.
Oh, okay. Yeah, I had a question about the tech boom right now because I know last year I was watching the market and like my friends who invested in a portfolio of like Zoom, Loom, Slack, all the tech companies, it went up 92.5% in their portfolio over a 6-month period. What's your kind of outlook on that? If for us that didn't invest, is it still a time to invest right now, or is it already kind of riding a high? Because I know Zoom, like we're using Zoom right now, and Zoom's only gonna get bigger and bigger as we hit the third wave in BC.
Well, you have to look at each stock individually, and you have to actually assess it, right? You have to analyze it to the point where, what is the PE ratio? Is it actually above and beyond what it's supposed to be trading? Is it hyped up where a lot of speculators are just putting money into it to rise it up to what it's actually worth, right? When you're actually looking at these type of things properly and then look at the fundamentals of investing, you don't want to go with a FOMO thing sometimes. I think there's still a potential for it to go up as the economy moves forward with these technology, but it's also almost close to a peak sometimes, right? Where unless they're being very innovative and coming up with very different solutions that's going to capture more market, I would be careful with these type of things. If you do, let's just say an ETF where it is indexing a type of tech portfolio that spreads out the risk over a lot of different tech companies, then it may be a better choice of entering into that type of situation versus them buying these individual companies itself, right? So the diversification is there and you spread out the risk.
Okay, and then you said to look at the PE ratio. So do we analyze the PE ratio, or do we go online to find the PE ratio of these
The
companies?
PE ratio is listed on every single stocks, right? If it's like 20, like if you look at a average PE ratio is around 15 to 20. But then if you pull up a Tesla PE ratio when it's 1,000 something, like it's off. When you compare that to a Toyota, and they're both car manufacturers, how come Toyota is one of the best car manufacturers right there, And why is Tesla outperforming it by 10, like 1,000 times? To me, stuff like that sometimes doesn't make sense. I know there's a fear tactic or FOMO tactic that's driving it up, but at the same time, fundamental wise, you know what? I'm afraid to hold it sometimes. But what I do is I will look at different ETFs and other stock, like indexes that does hold it. So I don't have to put my risk in it directly, right? I can still have a position in it, but I don't have to essentially hold it myself. So that's the diversification method of not putting all your eggs in one basket, right? Yeah, you could ride out the gain. And I've seen, like, I've gone through the $2000 tech bubble crash. I've gone through the 2008 crash. I've seen the crash last year. And for a lot of my clients, it didn't end well when they chased after the riches, right? A lot of them lost it just as fast as they gained it. So that's why I'm very protective over my clients whenever we talk about investment. I want them to follow the strategy of, why is it that we're investing in the first place? Can we actually track it according to the goals that you set for it? If we can't, and they don't listen to me, I actually fired them. I'm like, I don't want to be your advisor anymore. If you're not going to listen to me in the first place, why don't you do it on your own? And I'd rather not take the liabilities if something goes wrong, right? So for us, Jacob did talk about fiduciary duties. For me, being a CFP, I actually have fiduciary duty to my clients, right? It's actually part of my CFP contract that I have to do that and put my best interest in my clients. So if I was to make these type of recommendation, I have to be true to them. I'm like, are you okay losing the portfolio just as fast? If they're okay with it, and I don't think is within their risk, I'll tell them. If I say that, okay, you work hard to save for this down payment you're going to put in, are you okay not buying that house in the next 2 years like we originally planned? If the market tank, or if you lose like 40% of your capital, we always try to bring it back to the goals, right?
Okay, thank you, Ivan.
Yeah, no problem.
I'll just add one more thing here. Michaela, are you have you invested before?
Sorry,
Have-
what was that? I missed your question,
Yeah,
Jacob.
no problem. Have you invested before?
I've invested before. So I hold a couple tech portfolios. So I do have an RSP, TFSA, and I have private stocks.
Gotcha. Did you also attend the previous webinars by any chance?
No, part of it. I had to
Yeah, no
step
problem.
I'm still at work right now, so part of it.
Yeah, that's okay. That's okay, totally. If you watch those, maybe that'll give you a little bit insight of what that background comes from. And there's this book that I recommended twice in those webinars, and I'll post it in the chat right now. And it will give you, I think, a really, really good foundation for investing. And I recommend it to literally every single one of my clients, just so you know. And so just so you know, like, I was mentored by I was really fortunate to be mentored by someone who manages $6 billion, right? So this guy really knows his stuff, right? This is the kind of stuff that we want to have information about, because investing, right? If you do it wrong, right? It's the difference between retiring early and never retiring. Right?
Yeah, so I
So,
have an accounting background, so I
fantastic.
in accounting and finance. So
Great.
I haven't touched it for a while because I went into healthcare. So
Okay.
I just haven't touched finance for 16 years. So it's been a while.
Wow. Okay, cool. So hopefully that book helps you a bit. I think that'll give you a better idea of how professionals in the real world manage large amounts of money, and you can apply it to your own life as well.
Great. Thank you so much, Jacob. Thank you,
Yeah.
Ivan.
Great question. Maybe we'll move on to the next one here. And sorry, I realized that there might be some follow-up questions, so I'm kind of going back and forth here. So thanks, Michaela, for that one. I'm going to brutalize this name. Kushin Hu asks, how do we find a good advisor? Really good question. Really good question. There's a cheeky answer to this and there's a serious answer to this. But Ivan, I'm really curious to see how you do this, because I feel like you've seen a lot of great advisors and a lot of terrible advisors. So what are your thoughts on this?
Yeah, it's almost looking at what their self-interest is in the advisor, right? you will know when you come across a good advisor when they tell you the truth, right? Even though they're not going to make any money from it, they'll still tell you the truth. You know that that's someone that you can trust. Because for me, being an advisor for the last 17 years, or is it 18? I lost count. Going into 18. I've taken many roles in the financial industry, and my previous role before this is I was a director at Sun Life. So I've seen and I've hired good and bad advisors. Some of the advisors that I see that are good is they usually put the client's best interest ahead of them. They're always willing to go the extra step to help out the clients. They take the time to understand the clients and their situation. For example, one of the most important meetings is called what we call the fact find meeting. That's when we actually sit down with the clients, we get to know the clients, we get to know their information. And I've seen advisors that go through this fact find meetings within 30 minutes. I'm like, how do I actually plan for someone if I only got to know them for 30 minutes? Right? I don't understand their whys behind what they do. I don't understand what this is actually for. All I have is like their information. So how do I put together a great plan that can actually help them move forward? Right? So when an advisors listen more and ask great questions to you to make you think, then you know you're dealing with a good advisor. If they're just trying to sell you on products or a sales strategy, then I would be very careful, right? So make sure you ask good questions and see how they actually answer it as well. If they take the time with their answers, or if you know that the knowledge is there and they provide you little nuggets, you know that you're working with a great advisor. And if they don't know, they'll tell you they don't know, and they'll say, you know what, let me check and get back to you, versus giving you false information that could eventually ruin what happens with your life and your portfolios or whatever planning that we're doing for the client.
Thanks, Ivan.
Yeah.
Good, sir. Just saying, great. I really like what Ivan said about that. Oh, sorry, Susan?
Oh, thank you. That was a very good answer.
Yeah, and so something else on this is Dave Ramsey talks about this, but he talks about finding somebody who has the heart of a teacher, right? So a really good advisor will typically be able to explain things to you so that you're empowered to ultimately make your own decision, right? You just ask about what are the pros and cons about a certain topic, and yeah, if they can explain that, articulate that to you, and you can understand them, and you're empowered to make your own decision, that's a really good sign. So I'd write that down maybe, because you just know someone who has the heart of a teacher is really important.
Yeah, and part of being the heart of the teacher is explaining it in like a simple language that you know, that you can understand, and it can help you move forward in your plan, right? I've also heard advisors where they're so technical and they're trying to sound smart, and I'm just sitting there in a joint meeting with them. I'm just kind of shaking my head because I'm looking at the client's face and they're like, I have no idea what you just said. And he's pretending he's sounding so smart, and I'm just shaking my head, and I had to cut in and said, what he said was this. He's like, oh, why didn't he just say that in the first place? Right? So simple language for you to actually be able to move forward and take action is very key in that teacher role.
I feel like Ivan was subtly roasting me there, but thank you, Ivan.
It wasn't you. It was
was it not this time? Okay.
No, it wasn't
you. Yeah, great. Here's Joseph D, my man. You talked about compound interest, where you pay like $50 a month for the grand total to continue to increase. But when a stock increases, the price of the stock will also increase. But when the stock increases, the price of the stock will also increase. Sorry, let me just. You guys see the question up here at 7.2?
Yeah, hi. Okay, so yeah.
Yeah, man.
Okay, yeah. So that was terrible. My bad. Okay,
worries.
so yeah, you talked about compound interest, how you keep putting like maybe like what $50 like a month into like something so it can like continue to increase. So what am I putting that into exactly? Is it like a stock, right?
Gotcha. So what are you investing in? Is that your question?
Hmm.
Yeah, exactly. So I think G mentioned this in the third webinar, right? And what's going to happen is you can put that money into a diversified portfolio, right?
Okay.
So that's, you have some of your, it's kind of like that different analogy that Jonathan talked about. He was talking about the boats that go into the water.
Oh yeah. Yes. Okay.
Yeah, exactly. And so you have to pick a fund, right? Or get an advisor to pick you a fund that is diversified and has those four other characteristics, right?
Okay. I see what you mean. But okay. Wouldn't the price increase like over time? Right.
Yeah.
So I think you guys also said maybe put like $50 a month into inside it so it can like continue to increase, or was it maybe I think it was like 30 now that I think of it.
The key point
Um.
is it's about 15%, and we say 20% of every paycheck.
Oh.
Right?
Okay. I see.
That's for retirement, right?
Okay. Wait. Wouldn't it okay, if the stock keep going up, if it keeps increasing, wouldn't the price of the stock also increase?
Yes, exactly. So like you are buying in pieces, right?
Hmm.
You're just buying all these different boats, right?
Okay.
And so over time, like they will increase in value, right? Over the long run, like 40 years we're talking about, right?
Right.
Even
Right.
like, just in average, it kind of goes up and down, but over the long run, it goes up, right?
Okay. I see.
And so yes, even though the value is going up, right, you're buying on the way up, you're buying on the way down, but because you're focused on the 40-year period, right? Because you're gonna maybe retire or keep investing for the next 40 years, right, Joseph?
Yeah.
That as you keep contributing money to these investments, right? That pool of money is going to grow bigger and bigger and bigger, right? So the ones that you put in today at age, I don't know how old you are, maybe like 23 or something like that. At this age, right, that's going to grow and get bigger and bigger and bigger, right? And even when you're age 30, still putting in money, that's still get bigger and bigger and bigger, right? But in the long run, all that money is going to be worth more than it is today. That's because you keep putting in money to this.
Oh. Okay. Okay. I
this long run.
see. Okay. Yeah, that helps a lot. Thanks.
Cool, man. No worries. Next question here is, I think we kind of tackled Mikhail's question here on this one, so let's get that one for now. Daniel, I currently have money in a Roth IRA. So I know already, Daniel, you're in the US. So let me just read the rest of this and see if we can just answer it. But worried about putting money into an index fund currently because I feel it is overvalued right now. Should I dollar cost average in an index fund, or would it be feasible to wait for the stock to correct itself and buy in the dip? Yeah. How do I want to phrase this question?
So essentially, if you buy it and dollar cost average, you would essentially buy some when the dip goes down, you buy a little bit more, and then when it goes back up, you buy a little bit less, right? So the dollar cost average will always average out your cost of actually buying. But if you're just gonna wait for a correction and for it to dip, chances are sometimes you're a little too late. By the time you actually take action, the uptrend is already happened, right? And it could happen very quickly. By the time your account settles, or if you're trying to transfer more money into it, you might have missed that uptake. Versus if you're dollar cost averaging in, you're staying invested and you can actually ride the uptrend of it, right? Majority of the people that actually miss out is when they try to time the market and they miss the majority of the growth right away. So what you want to do is stay consistently in the market so that you can advantage of these situations where sometimes it could be a 2 or 3% drop one day, sometimes it could be a 1% bounce up the next. Because some people will say, hey, it's already low, let's dump a little bit money in. And then it might be another news that comes, like especially when Trump was tweeting, oh my gosh, he influenced the market so much with a single tweet, right? So it'll be either a huge spike up or a huge spike down. So if you're trying to time the market based on these type of reactions, you could not win all the time. But if you stay consistently in the market, then when it does go up, you know you're going to capture the gains along the way. Does that make sense? Okay, thanks, Daniel.
Yeah, Daniel, this is a really great question because it's a very, very tough thing. Like we know logically, I'm not sure how much you've read on the subject, but we know statistically the best thing to do is to put money in because time in the market beats time in the market. And if you look at almost every time period, that's the case, right? And it's so hard, man, I know. But if you look at the S&P, like the chart, right? You'll notice that it's making all-time highs all the time, right? And it's like, when is there gonna be a dip? And then suddenly you got this dip and recovered in like a month and a half, right? So it's really hard, right? But like Ivan just said, time in the market will always beat time in the market, right? And you've got a really long life, right? And so you have that, I mean, you look super young, but also like, you know, you look good. So I think you have that time horizon, right? So if you're able to contribute consistently, right? That was like one of the rules that G talked about in the last webinar, right? I know it's really hard to be like, oh, I feel like we're at the very top, right? It's really tough to put that money in. But statistically, we know, and you can look this up for this guy named Ben Felix, who talks about this too, like the market's being really high and do I want to put money in? Yeah, that's basically the route that statistically would be the best approach to take. And as a portfolio manager, like as a professional, like that's what we do too. Right? All right, so next question here. Sinyed asks, do you have suggestions for someone who doesn't know who doesn't want to do stocks, for example, mutual funds or ETFs? Sinyed, are you here? Like, could you unmute yourself?
Yeah, I'm here.
Awesome. Okay, cool. So are you saying that you don't want to do like, you don't want to own stocks, or that you would rather do ETFs and mutual funds?
Yeah, I'd rather do something like mutual funds or ETFs.
Gotcha. Okay, cool. So that link that I posted, that book, have you read that book by any chance? Because if you have, I'll send you something else, but have you seen that book already?
No, I haven't.
Okay, cool. Read it. It will change your life. If you're Canadian. Are you Canadian?
Yes.
Excellent. Okay, cool. Read that book, change your life, and then call me if you want to afterwards, if you still have questions. But that will help you a whole ton.
Okay, thank you.
Nice. Let's see here. Dion Leung asks, I've heard of over diversification when building your portfolio. Is there some sort of sweet spot where you're not putting all your eggs in one basket and not spreading your assets too thin? Great question. Oh, let me think of how I would answer this one.
You want to answer it, or do you want me to answer it?
I want you to answer everything, Ivan, but I'm just like, if I can supplement anything. Yeah, you can answer everything, actually. Your opinion is way better than mine.
Right. So even for the previous questions and stuff like this, where if you're new to investing and you don't know how to rebalance and you don't want to hold too many stuff, one of the things that you can do is, let's just say within the mutual fund, is called funds of funds or portfolio funds. Right. So it's based on your risk tolerance. So when you answer these questionnaires, you'll say, okay, at the end, your risk tolerance is balanced or your risk tolerance is aggressive. Then you can technically look for these type of mutual funds or ETFs that actually hold what your risk tolerance is. And like, for example, Vanguard has a bunch of them where it's like a balanced risk or a growth risk. The MERs on it is like incredibly low. It's self-rebalancing. It holds a bunch of everything that you actually need. Therefore, you're actually not over diversification, and you're actually properly diversified based on your risk tolerance. And it's a great way for people to start that doesn't know how to manage the portfolio yet, right? And then when we're measuring how your portfolio is doing against your goals, this is where the financial advisors can say, hey, you're going to actually miss your goals if we don't adjust your portfolio. What if we increase the risk slightly because we need to get 8% growth instead of a 7% growth? Then we can add or take away from that to actually enhances your portfolio a little bit more, right? So if you look for these type of diversified funds or portfolio funds, on too much indexes right away.
Thanks, Ivan. Dion, one more thing here, and feel free to unmute yourself if you want to follow up on this, okay? And cut me off, it's fine. But on this topic, okay, if you have, okay, rewrite this down, a market-weighted index, right? You don't need to worry about spreading your assets too thin. And just look at that up and Google it, and you'll dig into it and be like, oh, that's why Jacob is saying over diversification is not a risk if you're using a market-weighted index, right? And Ben Felix again talks about this. Like, is there such thing as over diversification? That's a really good question. But yeah, so market cap weighted index, and then you can read about Ben Felix a little bit. Coming back down a bit here. Pushkin says, instead of directly shorting or buying puts, how about buying an inverse ETF like HXD? I'm wondering if we even should answer this question.
Be careful of compliance is all
I know.
I'm saying.
Yeah, Pushkin,
Yeah.
great question. Very complex. I don't want to get slammed by compliance. Sorry, go ahead.
Ivan, are you allowed to answer this?
With compliance, no,
Okay. No.
because it's talking directly about a stock, and
Yeah.
I don't want to, or
Yeah.
a holding. So
Cool.
I
Sorry. Yeah, good
can't
point.
technically comment on it.
Great. Sorry, Pushkin, can't answer that question for you there, but it's a very good question. Obviously, you kind of have an advanced perspective on stuff. Alan, he's just talking about historical PEs. Okay, this is a great point, Alan. Actually, I don't know if you know this already, but historical PEs are around 16 to 20. You're right, and right now it's around 40 to 45. I think that's about right, something like that. I think it's about, yeah, you're probably about right. And it seems overvalued, right? If you look at the S&P 500, PE values over time have been slowly like as a whole have been grinding up also, right? So I think like back in the day, used to be like hovering around like 10 or 9, and then when it was 20, people were like, oh, it's overvalued, right? And that was the average for a long time now, and people thought, oh, we're missing out because it's overvalued. And now it's like 25, 20 seems to be the historical norm, right? And so you're seeing it's about 16, right? So PE people used to think that it was a metric for an overvalued market, and it probably still is to some degree, but once again, Ben Felix has another topic that talks about PE as a measure of overvaluation, right? But you're right. When you look at like the Japan market, I'm sorry, I'm getting ahead of myself. PE ratios show you a part of the story, but it doesn't show you everything. Let's just keep it at that. Great. Let's keep going here. Let's see. Alan, there's a lot. Alan says there's definitely shady advisors out there too. Lots of salespeople out there. Biting my tongue on this one. Great comment though. Michaela, I met an advisor from WFG, World Financial Group. They provide webinars, etc. What good questions should we ask for advisors? We did talk about that a little bit earlier. So you guys want to add anything else, or maybe we'll just skip that one for now?
No, this is going to come up a lot, especially with WFG stuff. Let me put it politely. They're structured. It's definitely a multi-level marketing structure, right? They push it like, yes, we're helping educate people. And a lot of their advisors are doing it part-time on the side, but they get paid mostly through recruiting, right? And they push mostly insurance products anyways. And very little of them actually talk about finance and investing. And because I've dealt with so many WFG advisors client before, those are some of the most headache clients I've actually dealt with. When there's, for example, they talked the client into leveraging their home equity line of credit. So they took $400,000 of their home equity line of credit, invested into the market. That was in 2007. Market crashed a couple months later, and they lost 40% of the value of the investment right away. All of a sudden, that advisor disappeared. They couldn't get a hold of that advisor anymore. Their uplines weren't willing to help them out because there's a lot of compliance issue at that time. And this person came up to me and said, what do? I need to sell the house in the next couple months. I don't have the money to pay this back, right? So you got to be careful of like the type of advisors that sell you based on strategies versus instead on what you actually need, right? So Enoch and I have also seen a lot of scenarios where they make cookie cutter recommendation, where we had like 5 clients in a row that dealt with WFG clients. I'm like, Enoch, isn't this recommendation the same as the last 4 clients that we actually sat down with? Why are they all recommending this amount Like they didn't even do a needs analysis. And why do they all use the same products? And every single one of their needs are different, right? So when they don't actually go into a proper needs analysis for you, and they're just already making a product recommendation before they actually get to know your situation, that's when I usually would stay back and say, okay, this person's not actually looking out for me. They're just pushing something and they are very salesy, right? So um, just be ready to say no, right? To say, no, this, if something deep down inside doesn't feel right, go with your gut instinct. If what they're recommending is not even in line with what your goals is, step back and get a second opinion, right? So you don't have to go with whatever they recommend. You want to make sure whatever recommendation is put is actually according to your values and your goals, and why it actually makes sense for the numbers that they actually recommend to you. So if you want to ask good questions, you can say, how did you come to this conclusion that this is what I need? How is it in line with my goals, right? So you want to ask those type of questions as they kind of push some products towards you.
Thanks, Ivan. Great answer.
Yeah.
Very good.
No,
Cool.
that's yeah, I'm going to leave it at that for WFG stuff.
Sweet, thanks. Wing asks, like someone mentioned earlier, we're at all-time highs in the stock market. So what are some warning signs of a bubble? Do you think we're in one now? And what do you recommend young people do during a market crash? And then she says, do we just hold everything you already have, or are there other steps to take?
The the funny thing is everyone's always saying that the market's at the all-time high, and you know what, they're right, and it's always going to push it, it's always going to go higher, and it's always going to be moving forward, especially if we look at, technically we're supposed to be in a recession right now because of the pandemic, but every single country is printing money or giving stimulus out to keep people afloat. So there's extra money that's always going to flow back into the market, right? So you don't want to miss out on the market if you do want to invest. You also want to, let's just say, look at, if you have debts and student loans and credit cards debts and all these things, you shouldn't be actually be investing in the first place, right? You should actually technically pay those off first. You should also make sure you build a proper emergency fund so that if something was to happen to you, you're not going to depend on their credit card to get you out of the situation that will get you back into debt. So you want to position yourself to be in the, okay, no more debts or very minimal debts other than student loans left, right? That you have a sufficient 3 to 6 months worth of emergency fund savings. Then at that time you want to look into investing in towards the markets, right? If the market does crash and you have no money left and something goes wrong, then you're only going to get back into debt. So you don't want to be in that type of situation. That's why we always tell people there is a proper order of financial planning. And one of the main things that we want to do is make sure that we're not limited to our ability to respond when something happens. So for most of you on here, our recommendations, just start savings. And even though it's liquid in an emergency fund, like a high interest savings in an EQ bank or a Manulife Manu bank, where they actually offer something like a 1.5 to 2% for a savings account, just store it in there for now, right? Once you're in a position where you're actually making decent money, you already pay down all your debts, then at that time you want to look into investing.
Thanks, Ivan. Wayne, do you have any questions? You said mention something. Definitely have those first bases covered. No debt, sufficient savings. I guess I meant young people, as in young professionals who've been working. Yeah. My main thought is, first of all, you've got great glasses, Wayne. They really suit your face. So I don't know if you picked them out yourself, but they look great. The second thing is, the biggest thing is, yeah, definitely like your time horizon, just like Daniel's is super long. So like one of the worst things you could do is pull out. Like once again, time in the market beats time in the market. And here's the cool thing, like you don't need to be right about time in the market to be rich. You saw G's slides that he shared last time. And you're like, yeah, maybe if you time the market, you could maybe avoid some of those days, right? But I think G had that illustration by JP Morgan that said, if you miss the 10 days in 20 years, right? 10 days in 20 years, your return rate drops by like 3%, right? Every single year. So it is a really tough, and it's like emotionally, logically, it's very tough, right? But it is the right choice statistically. And like I mentioned before, like that's what professionals do. Like we keep our money in there for the long term. If that's like your goal is to keep it for retirement. Okay. You see something else here? Let's see.
Thank you.
Yeah, no problem. If there's anything else, I know you know G, so definitely you can just hit him up. Yeah, or any of us really. Next question here. Juliana says, do you have any recommendations for good starting credit card for students? I'm looking into getting one, but things are a little confusing and I don't know where to start. Yeah, good question.
So for credit cards, especially when you're younger, you want to look for a credit card that essentially has no annual fees, because the annual fees, even though it's $150 a year, like when you're starting out, you don't actually need to pay that, right? So it'll save you $150 a year. Be careful of the credit limits that you guys have when you do apply for it. When you guys have let's just say let me share a story for myself and what I actually went through. Okay. And for me, I'm a very impulse buying type of guy. And when I'm talking about impulse buying, there's one day I drove my friend to BMW to get his car serviced. And I was just walking around the showroom. And then I saw this car that I like. And by the end of the day, I actually drove out with a BMW as well. Like that's the type of impulse buying that I have. So when I have a credit card limit of like $5,000 or $10,000, one of the things I do in my mind is I justify for the spending, right? And I'm like, oh, I can do this later, or like I end up spending money before I actually make it, which is such a bad thing. So what I started doing is, for my credit card, I have two credit cards that I hold. One that I use for like strictly monthly purchases and online purchases, where I have that limit only set at like $1,500, right? If my card gets compromised, it's not going to affect me as much. But at the same time, there's times where I need to buy plane tickets and stuff like that, or one-off stuff where I have to spend a little bit more. Then I'll use the other credit card which is like a $10,000 limit, right? They actually gave me a $50,000 limit. I told them to cut it back down to 10, because I know that I don't want to put myself in a position where if I end up spending all that money and I don't have enough money to cover for it, it's going to put me in trouble. So for a student, you want to make sure that you start building credit by, yes, have a credit card. One of the things that you want to do is wait for the statement to come out before you pay for the monthly, before you pay it off. A lot of people say, okay, I spend today, I see I have money in my bank account, and then they transfer it in right away. One of the things when you're doing that is you're not actually building credit. Credit is when there's an issue of a notice that you owe something, and then you pay it off. That's when you actually establish credit. So when you put something hard and you pay it off right away, you're not actually building credit as fast as you think, or if any, you're just kind of moving along the credit score doesn't really move up or down when you're doing that. Make sure that don't fall for like all the points. I'm spending it for the points. Yes, it does help. For me, I had to learn how to budget properly first to know that how much is my expense, how much do I need to spend in each area. And then once I got to know, essentially what I did was like the envelope system or the jar system in the beginning, where I have to put money to physically see how much I can spend each month. If I took money out and the money is gone, then I know I can't spend in that area anymore. Once I got used to that, then I transfer all my payments towards my credit card every month, because then I'm fully aware of the numbers of what I need to spend or where I can't spend, right? So you want to be careful how you actually manage your money and how you track it on a monthly basis with a credit card. If not, we see a lot of people get into debt very fast. Most of the people that get into debt fast is because A, they don't have an emergency fund. B, if they lose their job and they have no other ways to actually pay for the bills and they use credit. Or C, usually there's some sort of disability or some sort of injuries that take them out, and then they have to use credit to survive, right? So be careful of depending on credit for surviving. It will put you into a debt that's going to take you years to get out. I know that's a little bit winded, long answer for a credit card, but it definitely needs to be covered for sure.
Yeah, thanks, Ivan. There's a reason why we repeated this one line like literally 3 times during the class. We said, modern day slaves are not in chains; they are in debt, and that's why it's so big. It's just normal to get a credit card these days, and it's okay. Yeah, if you pay it off in time and you don't abuse it, it's great. Julianne, are you there right now? Like, can you unmute yourself?
Yes, I'm here.
Nice. Okay, was that helpful? I don't know if that was that's put to you at all.
Yeah, that was really, really helpful. Thank you so much.
Cool.
Yeah, I've been trying to figure it out, so it's nice that I have some things to look for now. So thank
Great.
you.
This is not a recommendation, but one of the most popular student cards is BMO's SBC card. So it's not a recommendation. Very clear, this is not a recommendation, but I would just look it up and you can take a look. Cool.
Okay, great. Thank you.
Sure, no problem. And then for those of you guys who are outside of like just graduated, who have an income, I would say Tangerine and Simply are also things that are not recommendations, but you probably want to, you can look into those too, because these are also no fee credit cards, like Ivan just mentioned. Right? Okay, let's see here. Jessica Wang, do you have any books or any recommendations for people living in the US? Jessica, are you with us still? Yes, she is. Do you want to unmute yourself, Jessica? If you're shy, that's okay. You can stay unmuted. All right, so we will just continue here. Feel free to chime in though, if you're trying to figure it out, Jessica. Oh, gotta come in again. Mic doesn't work, so worries. No worries. So by recommendations, what do you mean? So books we can talk about, but recommendations for people in the US?
Well, like there's the standard, like The Wealthy Barber, The Automatic Millionaire. These are the very typical books that just get people started and just basic concepts of how to even get started. If you want more technical books on trading, Jacob could probably recommend a lot more books in that area. But if you just want to start out, like, yeah, pick a book like The Wealthy Barber and The Automatic Millionaire, right? These are things that help you. They both say the same thing essentially in the long run is make it automatic, or do it, set aside 10% of your pay automatically so that you don't think about it. And then eventually, if you set it, okay, let me break it down in simpler forms. We should technically save 20%, right? 10% towards long-term savings that we're not going to touch, is going to be for retirement purposes. And then 10% towards short-term savings, which is potential down payment for a house, potential buying a car, potential honeymoon, or paying for a wedding in the future. These are things that's going to happen within the next 5 to 10 years. So if we're able to set aside these type of things, you'll be in a okay position if something was to happen. So for me, even before I set aside the 10% for short-term savings, I make sure I have my emergency fund top up first before I actually start saving for those things. But check out those books. They will be a good read, and it's very simple, easy to understand.
Thanks, Ivan. Jessica, if you haven't watched the previous videos already, like the first 3 sessions, strongly recommend that, because G and I, we've it works like really simple. I would just say 2 resources, okay? You have to read this book. It's called The Millionaire Next Door, okay? You absolutely must read probably that. Like, that is my strongest recommendation. First time I read it, blew my mind. You absolutely need to read that. Like, it's by far my strongest recommendation for everyone. So that one's the book, The Millionaire Next Door. And the second thing is there's this gentleman, I'm not sure if you're in the US or Canada, but you said the US, so obviously the US. Dave Ramsey is probably one of the few people that I trust to talk about personal finance in the US. With that being said, there are like 2 things that I don't perfectly agree with him on, but he's a really good resource for the most part. Cool. I quote him all the time, and he's a really, really good resource. So Dave Ramsey and The Millionaire Next Door, those 2 resources are very, very strong. Daniel asks, this question stemmed from the WFG question. Sorry, this stemmed from the answer to the WFG question. What steps does one take to be where y'all are career-wise? Y'all, as in all of us.
Okay.
Yeah, go ahead.
What step for me was I had to pay for my own education for a university, and during the first year, I was just taking psychology, marketing, entrepreneur, like all these random courses because I didn't actually know what I wanted to do. So I didn't actually want to waste my money in paying for tuition if I didn't know what I want. Until 2004, when I decided to end up coming to the finance industry. So ever since 2004, I got my mutual fund license. I got my life insurance license just to get into the industry so I can start selling at that point, because I didn't even know what planning was back then. All I knew was selling. But as I continued to progress in my education, then I went for my certified financial planning designation, and I just never stopped. So now I have 10 designations, right? So I specialize in a lot of stuff that is more geared towards estate planning now. But Enoch, my business partner, is asking me to stop studying so that he can catch up with at least 1 or 2 designations before he's going to allow me to keep on studying. So for me, I love learning, and I love learning about all these different things. So if it allows me to grow in my profession, to be an expert in what I do, I'm more than happy to learn about it and just to be able to teach people the right things, right? So that's how I got to where I am. It's always challenging myself and to always grow, right? So.
Hey, Daniel, Daniel, this is your, actually, first of all, go ahead first.
No, it's okay. I was just gonna share about kind of a little bit about where I was career-wise too, because like many of you, actually, I graduated from SFU. So I graduated with business, but to kind of give you my really short career journey, my original intention was to be a musician. So I didn't actually sign up for SFU first. I actually tried to get into music school. And the reason is because my entire family members are artists or musicians or martial artists, something to do with art. So I'm the only guy in my family that ended up getting accepted to BD. And back then it wasn't even called BD, so SFU Business at the time. So it's kind of dating myself. But I went through it not really realizing what I wanted, because I wanted to do arts, but now I'm a business student. And as I started to kind of graduate, I had a lot of kind of these big life moments. The biggest life moment was when my younger brother was diagnosed with cancer. And that was the turning point where I really thought to myself, like, why was I hustling so hard and trying so hard to do all these things when my brother's lying in the hospital dying? And yeah, that ended up getting me to actually get put on probation. I pretty much dropped out of school at the time, and I was just really just trying to focus on some soul searching, being there for the family. Long story short, my brother was healed. He became cancer free at the time, and yeah, by the grace of God, I was able to get my footing back. Went back to school, and then yeah, was able to graduate. Got a lot involved with a lot of cool leadership stuff, and then yeah, then transitioned to the corporate world. So I thought things would be easier when you're working, right? You know, you're getting a good job, you're working in finance. No, I hated it. I hated the corporate experience. The moment I stepped in, I'm like, wow, I don't want to do this soul grinding work. And no offense for people that are in corporate, because it can be an incredibly fulfilling career. For me, it wasn't. And so I jumped ship and I went into nonprofit because, you know, that's where I can make the maximum impact. And going there for a while, I realized I loved the work, but I hated the fact that nobody had money. You know, all these wonderful people are working, but they're underpaid. And a lot of organizations were dependent on funding that when they dried up, they went bankrupt. So I was part of two nonprofits that had to go under because the government changed and their funding agreements changed. And so that propelled me to say, okay, how do I make as much money as I can, as quickly as I can, so I can support these people? So I went into tech, specifically tech consulting for startups. So I worked for a tech accelerator. So that's how I got involved in a tech scene. And this is where I thought I had found my ideal purpose, which is to climb up and be an entrepreneur, to be a CEO. And as I was kind of looking at management positions, because they wanted to fast track and promote me, I had another soul searching moment. And it was then that I just felt that this is not where I needed to be. And I ended up just walking away. So I walked away from a tech career. So those of you that have kind of like pretty intense parents, like, you know, those Asian parents kind of deal, yeah, imagine going to your parents and going like, yo, I'm leaving the tech industry and a 6-figure income. And then when they ask you what's your backup plan, you tell them you don't have anything. What do you think they'll say? So that was what I have faced about 4 years ago. But thankfully, my parents, you know, after a lot of talking, they got behind me, they supported me. And eventually, when I kind of just did more soul searching, I met Ivan. And I was able to kind of just find a career that really aligned with my values, who I was, and the impact I wanted to make. Where now, Ivan and I run our own independent financial firm, where we're able to fully do what we're intended to do and to fulfill our calling. And so, yeah, so my journey took about like 5-6 years. So that's just a little bit of taste of kind of where I got. I did not intend to do finance. At no point in time was I'm like, I'm going to be a finance guy. Maybe not like Jacob, like, you know, Jacob's like, his mind's there in finance, but my mind's
nerd.
there.
That's what I'm saying. Thanks, man. Appreciate that.
Right? I got you, man. I got you. But I don't know if this is resonating with some of you guys or if you guys are on track, but I've kind of questioned myself at every point of the way. And that's kind of when you really look at it, you want to align with what's your purpose, what's driving you. Like I switched careers 4 different times. I'm fortunate that each of them really brought me something new, and I'm able to integrate all the different experiences I've learned to propel my career. So yeah, today I know, like, yeah, thanks, Alan. You definitely have those moments, and you know, I use a lot of those consulting experiences or some of these other industries when I bring it back into the finance world. And so kind of my suggestion to you guys, it's as you guys are preparing for graduation, really just step out there and try new things. For some of you that are, you know, probably in first, second year, or third year, try new experiences. Maybe take a course outside of your faculty, even just try on different volunteer roles that can really open your mind. Like there's wonderful people like Jonathan and Jennifer and a few others that have really gone through what I've just talked about, and they're still kind of close enough to you guys in age. You guys can joke about the same memes and stuff. Yeah, like Jay Shetty's great. There's a lot of really cool speakers out there. Simon Sinek's Starting with a Why. That's another great book as well. There's The One Thing by Gary Keller. There's lists and lists of books. But at the end of the day, book knowledge is book knowledge unless you execute. So that was kind of a long-winded rant / story. But I kind of just wanted to give you kind of my perspective as somebody who's gone through what you guys have gone through. Somebody who's still trying to figure things out, but have found a purpose and calling in my life. And something that keeps driving me every day when the work gets tough. And I can say a lot more on that, but I'm going to end here. I'm going to pass it back to Jacob.
Cool. Thanks, man. What made you interested, Daniel? I can see it, so feel free to unmute yourself if you like.
Enoch covered a little bit of the experience I was going through. I graduated undergrad with a degree in business management, and then for the past 4 years, I've just been managing a mom and pop shop. But I don't feel like recently I just don't feel fulfilled, or like I haven't really found my purpose. But after attending y'all's workshops these past 4 weeks, I find it very fascinating, especially with the personal stories that you weave in through your workshops. I find it very fascinating how y'all's careers affects people's lives, and especially like, what was it in the week 1 where you said like, how do you value your brain is your biggest asset, right? And you should value your time accordingly. And then that kickstarted my interest going into the future workshops with this is a very fascinating workshop. And I was just curious mostly on how to get into the field.
Cool, man. Yeah. Yeah, there's definitely, it really stretches your brain, and once it's stretched, it doesn't go back to its original purpose. So that's cool, man. Thanks for taking notes. I hope you guys are all listening. Daniel's taking notes, and he can repeat what we just said. Like that's amazing. Cool, man. Yeah. So I think these guys kind of covered it. So I won't talk about too much of that other stuff. But yeah, if you wanna, I'll drop my LinkedIn.
So
if you
I
want to
think
connect.
Daniel was asking specifically on the career. Or so is that what you're saying? Like, how do you get into the career?
I mean,
Or
more
just the
so
field?
just generally, like really. Like whether it be like going back into like college, have to go back into college education settings, or do I have to? Is there like other what get my toe in the water kind of question?
Well, let's take this offline.
Right.
You can contact us. Enoch and I would love to sit down with you and kind of chat it over with you, just to give you a perspective on directions wise.
Oh, definitely. Thank you very much.
Yeah, and then I'll message you. I'll just put my email address in here, and you can email me.
Do that. That's perfect. Cool. Thanks, Ivan. So let's go to, we've got 2 more questions left here. So Alan asks, and Alan, if you want to unmute yourself, I feel like you really know what you're talking about. He asks it to Ivan and Ivan alone. So I'm gonna be quiet. What are your thoughts on Japan Nikkei index? Sorry, Nikkei asset price bubble. It seems over the few decades, it still has not recovered from its previous height in the 90s prior to the crash. That's, could you explain that question a little bit more, Alan? Like, what are your thoughts? Is a little bit too general. Could you be a little more pinpointed if possible?
Hi, I'm
Hey,
Alan.
man.
Hey. Well, I've been looking into investing for a while, and one of my concerns is in investing in like stocks or index where, you know, when it gets to the high point and then everything crashes, like maybe 70% of its value goes away. And I've looked into things like the Japan Nikkei, the asset price bubble, and then I saw that from if someone invested their amount from the high point, and let's say they just stopped there, the value of their investment would have gone down and not have recovered over that period of time, it looks like. So I'm just asking what your thoughts are on that.
Yeah, that's why diversification is the key, right? I don't invest in just one index. For me, I have it professionally spread out. Like I have some for the TSX, I have some for the S&P, I have some for the NASDAQ, I have some for the Russell. And then I don't, if I was to put something into, let's just say the overseas index that I don't know as much about, I limit it to about 10% of my portfolio, right? I don't put any more than 10% into my portfolio for stuff like this. And this is kind of in line with the cryptocurrency question that you have as well. Is I was curious about it. I learned what it was. I studied what it was, understand what blockchain was and how it works, and understand the mining process. So for me, I felt comfortable enough to take a little bit of risk in that area, right? But I only play with money that I am comfortable losing. So to me, like if I wanted to take a risk, it's just as bad as me going to the casino where I'm betting 50-50 on red or black. That's the type of money I'm willing to risk. So to me, at that time when I put some money in, I was comfortable. $1,000 is not going to affect me in any way. So I explored in cryptocurrency in that way. And I just left it and I never touched it. I never even looked at it until like 2 weeks ago when I logged into my wallet to see, oh, that $1,000 is at 13 grand now, right? So yeah, I've captured the gains when it was low, but now it's higher. And then yes, people are starting to open up to it, but it will never be a real currency. It's going to be a speculative type of currency, if anything, of why people are actually investing in it, right? Until there's, and Bitcoin is even not the best way to actually buy and sell using cryptocurrency at this point, because it's so limited in what it can do, and the value is going to be set at like 21 billion or whatever it is, and it's always going to be at that. But the main thing is, why is it, if it's not regulated, you have to be very careful with it, right? There's a reason why it'll never replace a real currency, is because if we look at an economy of how things work, when the government needs to control the inflations and be able to manipulate the currencies being up and down to control inflation risk, if you have it as a cryptocurrency where it's not regulated anywhere, they can't do stuff like that to control the environment of the economy and our country. So there's going to be a part of you that you can play around with these type of things, but like I said, like it's no more than what I would comfortable risking, right? To me, is like my vacation money. I know that I'm not taking a vacation this year, so I'll plot in that my vacation money towards it. But if I lose it, it's no big deal to me, right? If I do capture the gains, great. I'm not going to complain, but I'm not going to go all in with my money as well, right? So that's my take on like cryptocurrency. Is you make sure you do your research if you're going to. If you don't understand it, after you do your research, don't even touch it, right? You only invest in stuff that you understand. So even a lot of my portfolios that I hold, because I love cars and I understand the network of how cars work, so most of the stuff that I invest in is like EV stocks, right? Or like charging stations and stuff like that, where I understand where is it going, I understand the risk of it, I understand the ups and downs of it, then I'm willing to actually put money into it. If I don't understand technologies to the point where I don't know where it's going, I don't even touch stuff like that at all. Hopefully that's able to kind of answer your question of why do I touch on what I invest in, and I usually try to avoid the risk of losing money, right? And when I'm reading books like Ray Dalio Principle, I can see where his principle, if those of you that don't know who Ray Dalio is, he managed one of the biggest hedge funds in the States, right? It's a great book to read, but one of his principles is, if I can find a way not to lose money, I'm going to do it. So that's his mentality, even when he does trading for people, is he'll try to minimize the risk as much as possible, to the point, if I don't need to lose my money, I won't. Right. So that's the type of mentality I have sometimes when I'm investing in stuff as well.
Great, thank you.
All right, last question, once again for Ivan. Argent 11. I'm supposing that's actually his name, Argent. Hi, Ivan. What would be your best advice? Ivan, only your best advice, okay? None of this so-so stuff, just your top, okay?
Okay.
What would be your best advice for young people that you wish someone would have told you when you were in your early 20s slash financial life?
Yeah, like I wished I didn't take the type of risk I did early when I started investing. Um, for example, like I earn, I was good at earning money. Earning money wasn't the situation. I started my first company when I was like 18, right? I was doing club promotions even before I was able to actually go into the clubs. I always find a way to make money out of things that I enjoy. Like for example, even when I was a kid, I love cell phones. So I figure a way to actually get into the cell phone industry so I can actually try all the latest cell phone without actually paying for it, right? So these are the things that I really see. What are my passion that I enjoy doing, and how do I make money from it? So when the opportunity for me to, let's just say I love cars, so me and my friends were the one that brought the import car shows to Vancouver, right? So we actually ran those type of import car shows at BC Place for like 10 years. The first year that we launched it was like when they actually came up with the Fast and Furious movie. So the first year I made like 60 grand in one day. So making money wasn't an issue for me. Um, but holding on to money was. I wish that I didn't spend the way I did when I was younger and I actually saved and invest. And even when I invest, I wish I didn't chase after the riches or chase after the fast money because I lost those money just as quick as I earned it. So if I was to able to follow advice from, let's just say in my early 20s till now, is how do I do the slow and steady plotting route along the way where I don't actually take as much risk? Because one of the things I tell my client is my job is to make sure that I protect the hard earned money that you make because you're good at making money, but I don't want you to lose that money. So that's one of the mentality where I'm like, even if I can gain 5 to 7% a year, I'm actually already happy with my portfolio at that, right? Some years it gains 20, and like there's a certain couple investments I hold that gain 140% this year, right? But there's a lot of it that is the slow and steady part where I'm just making 7, 8, 9% a year. So if I'm able to do that when I'm young at 20s and I'm able to allow compound interest to work for me in my favor, I know I'm going to hit the $1 million mark when I'm in my early 50s, right? There's other ways for me to make money as well where like, yes, I went from $100,000 in debt like 8 years ago to paying it off within 3 years to having a net worth of $2 million plus within 10-year time frame. So I know how to make it work, but if I didn't actually lose the type of money I actually lost, I know I've lost at least $150,000 in taking risk, right? And if I was able to have that $150,000 compounded over the time, that would have been a huge favor to my bank account, and I wouldn't be like second guessing all the time or trying to chase after things all the time, right? I know that I can live a very comfortable lifestyle. Everything I need from my family is provided for. I can take a vacation whenever I want. It's not going to affect me. So, or at this point, I can go a couple of months without a paycheck and build a company if I need to, right? So I'm in that type of position now because I started following the slow and steady plotting route. I started following not chasing the richest route and just being able to accumulate what I have over time. So that is what my best advice to you guys is just continue on the route, continue on plotting and continue on just, it doesn't have to be huge returns. As long as you know that your net worth that you're measuring from this year to next year is actually going up, you know you're going in the right direction. If it's going backwards, then we should talk, right?
Thanks, Ivan.
Yeah.
Hey, Arjun, are you there right now? Do you have your mic by any chance? If not, or if you're shy, that's okay too. But if you do have a mic, this would be really cool. Looks like perhaps not. Okay, no worries. There's another question for Arjun here. Might be another long one here for you, Ivan, but how do you find the balance of chasing after money and chasing after your dreams / passion? My goal is to retire my mother and buy her 3 years. I am currently 22 years old and I am working over 65 hours a week, and I feel so burnt out. I am making a good amount of money, but I don't have time to see my friends / family or have time for my hobbies. Can you provide some of your wisdom? Thank you.
If you're getting to the point that you're burnt out, you know that you don't have a proper balance, you're no good to anyone, right? You can't actually be there for your mom or you be there for your friends. Like the reason why we make money is so that we can actually provide for the family or enjoy it in some sort of sense, right? I look at money as a tool and I don't actually have emotional attachment towards money, because to me it's just a number and it's a tool that allows me to do whatever I need to. If it's getting to the point where you can't do whatever you need to, you have to reevaluate what you're doing. If you keep getting burnt out, it means that you're not being efficient anymore. When you're not efficient, you can't actually help anyone anymore, right? So you got to have that proper balance of, yes, if the goal is to retire your mom in 3 years and buy her a house, then you have to look at the numbers to say, okay, how do I make that work? What's the down payment I actually need to actually buy her a house? If I need to support her, how much does she actually need to survive? So this is when I do retirement planning for someone, I will look at, okay, what do they actually need as income coming in when they retired? What are their expenses, right? Where are all the sources coming from? And then if there's a shortfall, this is where you can help your parents with the, hey, I can provide you $500 a month to cover your shortfall, so that you don't have to keep working as hard for your parents. But if it's gonna, if you're 22 and your mom's gonna dependent on you for the rest of your life, what happens when you're actually gonna get married? What happens when you actually have your own family, right? If you're already working 65-hour plus, it's not sustainable. You're not gonna make it very long before you're like, this plan is not working anymore. So what you really need to do is actually sit down and look at the numbers and say, okay, what type of plans do I actually have to come up with to make sure the numbers actually work in everything that I want to do without being burnt out, right? So there are investment ways that we can actually help you to say, okay, the money I do have set aside, how do I make it grow efficiently? But how do I cut down my hours to like even just 50 hours a week, right? If you can still do it at working 40 to 50 hours and you can still make everything work, then you're going to have that extra time to go out for, let's just say with the Chinese market, the bubble tea with Enoch and our blood sugar going super high because we have so much bubble tea chats. But we are able to balance things out. I work 5-6 days a week, but I also have to, thanks Enoch, great background. But I also have the proper balance where if my son needs me, I'm there for my son, right? If my wife needs me, I'm able to take that day off and actually spend quality time with them because my values with my family. So therefore, I am not letting anything else drive me. So my actions has to be in line with my values. If it's not, you're always going to feel like I'm burnt out or I'm not going the right direction. So if you want us to help you figure out these type of numbers, just contact one of us. We'll be more than happy to see if we can give you a guidance on not working too crazy hours, but what numbers do you actually need to help your mom?
I'm gonna quickly jump in here. I know we've been going around for a while, and I know there's lots of really great questions. But for perspective, I'm 28. I'm also hoping to retire my parents in the next 3 to 5 years. I'm also working crazy amount of hours, but I'm also able to have bubble tea with friends. I'm able to do a lot of these things because I made the effort to. I'm not saying that you're not making effort to, because it's incredible you're working 60 plus hours doing this stuff. But when I was about 24, 25, I was doing like 60-hour weeks too. I was bogged down to the point where when I first met Ivan, Ivan really grilled me on this because I was involved in what, 12 or 13 different projects. I had multiple jobs and I had multiple titles, like all at the same time. Like it wasn't possible. People ask, how did I do it? Well, no sleep, no life, and you just grind through it, right? That's my mentality. Until I realized, like, well, everything I was working so hard at crumbled, right? I mentioned when my brother got sick, and he got sick again. So right now he's actually going through cancer again. It's a new cancer, and he's going to be going for surgery this Friday, actually. So sorry, I'm a little bit not in the best state of mind for today. That's why Ivan's filling a lot of the questions. But it really gets you to look at the core of why you're doing what you're doing. So in this case, I put so much time into my work and stuff, but was my work really for my family and to the ones I loved? Or was it really a self-fulfilling purpose? And I had to be honest, like a lot of it was just to boost my own ego, getting a CEO title, getting a president title, that's nice. But then once you reach to the top, you realize it's lonely at the top. Because once you hit that president level, who are you going to celebrate with? Once you get that mansion, who's going to come visit you, right? And so I know that this is kind of my own bias, but I have to tell you this because I've worked with millionaire clients. I've worked with families where they lost everything. They gained all of it, but they lost their soul. We've worked with families where, the parents are overseas and, they're making millions of dollars. And the moment they come back and they say, I'm doing this for my kids, I'm like, your kids don't even want to talk to you. They don't even want to be your kids. And I'm trying not to get emotional. I'm sorry, but I've just seen so much hurt and just so much frustration from everybody because everybody's trying to work hard to do what they're doing to establish a career. And I love how you want to take care of your mom. Like trust me, I want to take care of my family too. I would give everything for them to spend another day and another year on this earth. But what you have to realize is to really treasure your time because you never know if you have the time. And so it's not really a finance answer. This is more just a life philosophy. But don't let the money cloud you into thinking that's everything. And I see a lot of really great comments in here that are kind of like on that thread. So yeah, that's just kind of my 2 cents of being in a very similar situation to where you're at. I don't know kind of what your circumstances, or maybe you're feeling that you have to work, or maybe you have some financial obligations. But yeah, feel free to chat with any one of us. We'd be happy to kind of talk it over with you because we all share a lot of similar experiences going through these. So you're not alone.
Yeah, like even for me, I'm in the position where like my parents, they're on like super low income, but part of me moved back to take care of them, or they actually move in with us. So I'm able to take care of them now, right? But I'm also in the process of rebuilding my house. So now I'm going to have a bigger house, give them a little bit more space. And how I'm structuring everything is essentially it's getting to the point, once the house is rebuilt, I have a basement suite that's going to pay for my mortgage. So I don't even actually have to actually pay down my mortgage if I don't want to. But obviously I'm going to pay it off super fast as well, given that I have the money coming in, plus someone is actually paying for the mortgage. So I'm able to provide for my family that way. But my family is also actually doing me a favor by taking care of my son when I'm working. So there's a good trade-off in the way that we have structured. But the main reason why I moved back to take care of my parents is when my mom was going through cancer, I wanted to be there for her, right? I wanted to be able to take her to the hospital and if they need anything, like they don't have to worry about the money part. I can just provide it for them. So it will happen if you plan it properly. It could happen. It's just a matter of like you don't want to work 65-hour plus, man. It's not sustainable at all. right? You're going to have an early heart attack before you can actually take care of your parents if you keep going at that route. So be careful, man. That's one of the warnings. Like, it's not worth it. There's a way around it that we can help other people, but let's work out the numbers so that you don't have to work that type of hours.
Can't believe it, but we actually made it to the end of our questions. So nice job, everyone. Any final thoughts? How do you guys usually close? How did you guys close last time? G? Or Enoch?
You're doing great, man. Just yeah, I can close this.
Yeah, man, thank you. Great.
No, we're super appreciative of you all staying on. It looks like it's been over 2 hours actually for this final workshop, and tremendous questions, and we'd love to continue this conversation. So if you guys want to stay in touch with either myself, Jacob, Enoch, or Ivan, emails, we have our LinkedIn's, reach out to Jen and Paramika and the rest of the Emerge team. But we just want to thank you for the past 4 weeks, giving this this opportunity to speak with you and bring in our mentors and share some of our experiences and our thoughts. And again, our goal is just to change lives and hopefully help you guys avoid the headaches before a lot of people have seen them, right? And so thank you all. We hope you have a wonderful night tonight. Enjoy your reading breaks. Don't party too hard, and do your readings and drink water and take care of yourselves. But yeah, I guess we'll log out here.
Thanks, everybody. Bye. Have a good night or morning, or I don't know what time zone people are in, but yeah. Thank you, everyone.
Oh, I can't believe we're done. My goodness.
Can we stop the recording, Paramika?
Yeah, we can set the recording there.
I can.
We might not use it all, but yeah, we'll just get it just in case.
Yeah, that's a long YouTube video.
Yeah.
Oh, no.
Well, that's pretty high value, so it's good.
Yeah, Jen, you're on the recording too. You made it.
Well done. Well done. You all did really well.
Thanks, Ryan. Thanks, Leona. Thanks, Serena.
Thank you, everybody.
Thanks, Sukhan. Thanks.
Oh my gosh, somebody's saying
great.
Enoch should be a motivational speaker.
Yes.
Nah, man, I'm
Yes.
too shy for that. I'm too
Highly
shy.
sought out speaker though. He is absolutely.
Well, I love that so many people stayed to the end.
Yeah, 2 hours too.
Yeah, it was really inspiring. Thank you so much.
No, thank you, Jen, for all your hard work. Seriously, you made it easy for us.
Yeah, thanks for making this happen.
No worries. We're glad to do it. Like, honestly, it was all of you. Like, the content was truly amazing. Like, I expected to like learn about money, but then we're here learning about like life and family. It's amazing.
Well, because money's not everything, right? Money is just it's part of life, but at the same time, you shouldn't let money control you, right? And one of the things that I always ask my questions, what's the purpose that you're trying to do with this money? And most of the time is building a memory, right? Is being able to, when I ask them, okay, are you going to remember how much money you spend, or are you going to remember the memory that you create with the money, right? So that's more important a lot of the time, is because we do what we do is usually based out of love, right? And when we do the love reactions for someone else, that allows us to create the memories that we can cherish with the ones that we do love. So once people start to understand that it's not about money, it's not about making a lot of stuff, but it's actually what we can actually use the money for, that becomes a bigger drive for why we do what we do, and it's more in line with our purpose at that time, right?
Oh, thank you. That's so wise.
Yeah, thanks for hyping us up throughout the workshops. I'm just going here and I'm like, Jen's like, oh yeah, that was good. I was like, oh my girl, what's up? So thanks, man. I really noticed that. Definitely was fun to see your chat in between and hype up the crowd. So thanks, Jen.
Yeah, of course. I was glad to.
So you should see some of the conversations that the four of us would have sometimes, where we would just be in a room and then we'll just chat about random stuff, and then next thing we look at our clock is like 3 or 4 hours in.
It's like live fireside chats. That's what happens.
And that's one of the things that we're going to be setting up soon is like having these fireside chats conversations where I'll get Jacob to set it up, but we'll have different
Oh, catch us on
conversations.
Clubhouse. Jokes. I literally just got it. It's so addictive. Don't get it. I got on like a
For you
few
it
days ago.
is. Yeah.
I can't stop using it. It's so bad.
Oh, that makes me want to get it more. All right. Well, thanks so much again. Like, this was a really valuable workshop. I'm gonna let you all go because it's like pretty late. I don't want to take up too much of your time, but I really appreciate all the work that you put in and the amazing session today. So thank you.
Yeah. Thanks, Jen. Cool. Thanks,
Yeah,
Elon.
thanks
Thanks,
for
Evan, for
hosting.
dropping in.
Yeah. All right. Bye, everybody.
You guys, good night.
Again.
G, great job, Abo.